Today on Behind the Roll, you'll be hearing from Craig Newman, Head of Institutional Client Services at Charter Hall. Craig has had an interesting and extensive career across vows, funds management, development, and now institutional client services. We'll be talking all things about Charter Hall's investment strategy and particularly what institutional investors are looking for in today's property market. We hope you enjoyed today's episode. Craig, thank you for joining us.
No problem. Great to be here. Thanks for having me on.
Amazing. I'm super excited to get into your role today,
Sure.
particularly breaking down the work you do on the institutional side.
Yep.
But before we get into that, could you give us a rundown of Charter Hall and what type of player they are in the
Sure,
property
no
industry?
problem. Okay, so Charter Hall's been established now for 30 plus years in Australia. It's really become what we would call a capital management platform and one that focuses on real estate investments and also some developments, which we can cover off a bit more detail. Essentially now the group's 90 plus billion of funds under management, and most of that is across the wholesale side of our business, which is roughly 50 billion of investment, equity investments. And that covers really our office sectors, industrial, logistics and retail sectors. We also broadly cover other asset classes, which are sort of what we brand as social infrastructure.
Amazing. And I guess in the recent times, do you have more conviction in one certain asset class or going towards a kind of specialized, tailored strategy, or what are you leaning towards in today's market?
Well, look, we work very closely with our investors. We see it as very much a partnership opportunity. So what we try and do is very regularly, discuss with our investors what are their investment objectives, both from a return perspective, but what sort of sector exposure are they looking for as well. So as a result of that feedback, and then I guess also looking at what is the product in the market and what do we think, we can create. We then try and use that to sort of work out what investment opportunities should we be working on presenting. We have our stabilised existing funds. So that's our flagship office fund, industrial fund, and most recently a new retail fund, a convenience retail fund. So really it's quite a sort of collaborative process to work out what do our investors want and what can we create for them.
Amazing. And your flagship office and industrial funds, have you seen the landscape changing or market sentiment at all?
It always changes. So I guess property being property, it's very cyclical. And I think, a high level, I think office has had its challenges post-COVID. Industrial's also seen a period of really strong rental growth, which led to a lot of supply that tapered off that sort of rental growth and therefore the returns sort of flattened out. And I guess more recently, convenience retail more broadly has performed, I think it's sort of outperformed over the last few years post-COVID. And now that's becoming a very attractive sector for investors, partly as a result of the returns it offers on a comparative basis. But yeah, it's all cyclical and you're sort of looking at where each sector is in the cycle. And obviously then you've also got to take into account, macroeconomic factors and global factors as well.
Definitely. And I'd love to hear more about the retail platform.
Sure.
So could you talk to that?
Yeah, so we recently, as of sort of middle of last year, launched a convenience retail fund, which is called CCRF. And that was really as a result, I guess, we had a lot of feedback from investors that they wanted access to that type of product, which is pretty much, neighbourhood shopping centres. And they service really what we call daily needs. So it's, really covering essential foods. It's supermarkets and shops, a very low discretionary component. But it's a sector that wasn't really able to be accessed by a lot of wholesale or institutional investors. And, we had feedback that they liked that exposure because generally it was producing a higher yield to office and industrial, a higher effective yield, but they couldn't access it. So CCRF, it's the first wholesale retail fund that's been created in Australia for 15 years.
Wow.
And it's raised $3 billion to date. And that's really attracting to a mix of domestic and international investors who are clearly looking for that type of product.
Yeah, super interesting. And now that we've talked a bit about Charter Hall and its products,
Sure.
could we segue into your role specifically?
Sure.
So what does day-to-day look like? What is the conversation between you and more the institutional side?
No problem. So, yeah, my day is invariably involving a lot of meetings, as most people unfortunately get stuck in meetings. But really it's sort of my job is to effectively work with both our existing investors and attract new investors on the institutional side. So that's really sort of targeting, 10 million plus investments. And you're effectively then working with our fund managers as well to cover the existing investors. it's really understanding who is deploying capital. So our funds are constantly sort of looking at investment opportunities, some development opportunities as well, or they're addressing gearing strategies. So I guess it's a combination of understanding what are the fund or the sector objectives, and then working with investors to understand where they're looking to deploy capital as well.
Yeah, interesting. And I guess to differentiate your role a little bit, can you go into the difference between, I guess, working with retail investors?
Yeah, so retail investors, mums and dad investors, as is sometimes known as, tend to be very yield focused. They're looking at sort of the high yields, which you can get generally from sort of syndication type products, or listed as well. So what we tend to focus on is much more I suppose you'd call it probably longer term type investments, which you do get with the pension funds, super funds and insurance groups and so on. So they're more perhaps targeting a total return over a longer duration, 5+ years, versus the retail investors, which are targeting sort of the higher initial yield and a bit more liquidity.
Okay, so different things that you're looking
different
for.
Products, yeah. And we have, different parts of our business that will effectively target or work with those different types of investors.
Yeah. So since you have a certain set of characteristics that you're tailoring to, what kind of assets are you looking out for? What are the kind of fundamental underlying tenets that you're looking for?
So again, we sort of go sector by sector, and we focus, we try and make sure that our strategy aligns with the investment criteria, and you're lining up the right types of assets that meet that criteria. I would say too, we're not, we don't go outside of Australia. We're a very domestic fund. We do have some, assets in New Zealand, but the business is Australia, and it focused on both, on all those sectors: office, industrial, retail, and social infrastructure. So what we're trying to do though is look at what is going to be accretive, either from a returns perspective, or is it something we need to do from a strategic perspective? We might be looking to upweight, for example, office in, Brisbane or Sydney CBD, and sort of, reduce our exposure to Melbourne. So it's always evolving. Logistics, we're always looking at what the infrastructure, what gives us best access to the road network that makes it, more conducive for our 3PLs to operate more efficiently from a freight perspective. So again, you're sort of just tailoring product or looking for, assets that meet the investment strategy for each particular sector.
And are there certain locations that Charter Hall invests in?
Yeah, we tend to focus on sort of the main population areas. That's sort of in Australia, obviously that's the eastern seaboard. But we and again, we'll differ. Offices, we really like, the core CBD markets. We think there's always going to be a demand for office space in the right buildings, in the right locations. Logistics, again, you need to be sort of the road, rail, port network is critical. Also, access to labour is important too for a lot of the groups that are looking to set up their warehousing and operations. And then retail, you really want to be in the areas with the biggest sort of population and the density.
Yeah, amazing. And now that we've talked a little bit about the platform, can we go all the way back to the beginning? So what was your studies, your career journey, and how that led to your current role?
Oh gosh, going a long way back. So I initially, I suppose, got into property. I would say I wasn't exactly sure what I wanted to do, but property to me was sort of appealing, and I liked the concept of property. I've always liked property, be it from, residential through to commercial to everything. So I actually started as a valuer straight from uni. And that led to, I think, the appeal of that was really to try and get an understanding of what drives value in property across all the different asset classes and sectors. But after doing that for a while, I was sort of went into developments and started working with a big national builder.
Bit of a pivot from house to development.
But this is sort of, one of the learnings is always be looking for opportunities, and if an opportunity presents itself, you take it. So for me, that was the opportunity, was to diversify out of valuations into development. But that was also sort of a journey that, after a while I realised that wasn't for me. And then I went into asset management, and very much hands-on asset management across pretty much commercial and retail portfolio with some industrial. And then that led to a sort of a change of role up to funds management.
Wow, very different.
Different again. And then funds management led to sort of a role change again to working in a more of a private equity structure into an asset management role, which is really investment management. And then, so then back now into what is more of a capital role where you're working with capital.
Yeah, a lot of different movements.
A lot of change over the period from both a role perspective, but also in terms of sort of the different groups I've worked for. So it's really gone from consultancy to private to listed to private equity to back to listed.
And how did you deal with all the pivots? Obviously, you were still in the property industry, but
Yeah.
a lot of different roles.
Well, look, and I think that's the beauty of property. You get to actually work across a whole diversity of roles and sectors and asset classes and for different structures. And, so I think for me, it's always sort of been, well, what's the opportunity? How do you continue to build out your skill set? And how do you gain, it's always knowledge building and I think relationship building as well. So you always just got to be open for looking at the next opportunity, keep learning, and then, lean into what comes up and look for, what's going to, motivate you to learn and achieve different results.
Yeah, great advice. Are there any other key takeaways that you've had going through all of the different movements?
Look, I think, it's always say yes to things. When opportunities come up, it's always lean in. And I think you've just got to continually take that mindset of trying to learn something. I would say too that property, again, it is very much a relationship business. So the more you can sort of get involved both, with broader teams in a particular company or business, but also externally, attending industry events is always important, and just sort of growing that network because that in itself creates opportunity.
Yeah, amazing. And are there any kind of events at Charter Hall where students can get involved?
Sure. Look, I think, we are trying to expand on we do an intern program. I think there's always room to improve these things. It's a real challenge, I guess, going from, being a student to getting actually into the industry. And I think that said, there's, all the property groups, in a bit of competition with investment banking and private equity too. There's always this, need for talent. So I think it's a good opportunity to sort of for the employers to be looking at students coming through from a uni, from courses and so on to try and get them involved in the business to give them that sort of real practical experience. And then it's just that sort of challenge of trying to work out what's someone's skills, how do they align with what the business is trying to achieve. And that obviously takes time too. So but, I think we are doing sort of an intern program. I think we can probably expand that hopefully. And then otherwise it's just like getting people in the business and then working with them over time to try and broaden their exposure because that ultimately gives the business flexibility to use them across other parts.
Yeah. And what type of characteristics or skills or traits do you look out for?
Well, good marks are always important. And I think, again, that sort of diversity of sort of thinking and backgrounds is helpful. But I think it comes down to aptitude too. It's like someone who's really enthusiastic about getting into a business, it's important. And I think you need to look for people who have got a desire to learn, are motivated, who are just generally interested in, doing things and learning on the job. But the more you can sort of put your hand up to take on work, I think it just helps too because it's sort of, it's showing that sort of enthusiasm, but it's helping people out too.
Yeah, to have the yes mentality.
Yes mentality. Always say yes, even though that can mean you're doing
full schedules.
Yeah, it can mean very full, and you're sometimes doing things you're not sure why you're doing it, perhaps. But that's a learning experience in itself.
Yeah, definitely. And I'd love to circle back all the way to your vow days or development days. Are there skills or things that you've learned all the way from the beginning that you carry forward now?
Yeah, look, and I think the valuation part of it really taught you about, how do you actually value an asset? And then that gives you the sort of how do you influence or how do you drive the property valuation? Because at the end of the day, our business is investing largely other people's capital or equity to generate returns for them. So that knowledge of what drives value is critical. So I think if you can understand all the features that go into a property valuation, be it from a cash flow perspective or outside of that, building quality, what's going to make a building attractive to tenants that they'll want to come to that building. So there's a whole lot that goes into that. But I do think, having that knowledge of sort of like cash flows and, even being able to look at a tenancy schedule, look at outgoing statements, from a development perspective, just understanding what's in a feasibility, what are all the assumptions. Those things, once you learn them, you can really sort of know how to drill down into an individual asset or a portfolio or a fund to understand what are the value drivers or, in fact, what are the risks to value as well.
Yeah, very fundamental knowledge.
Yes.
Yeah. And you mentioned risks. I'd love to
Yes.
talk about kind of risk mitigation strategy
Sure.
or current market conditions.
Yep.
What is Charter Hall doing, I guess, to respond to what's happening, or how do you communicate back to investors
Sure.
to remain that trust?
Well, I suppose the risk, what you're trying to do is protect, ideally increase value. But certainly in times of market uncertainty, I guess the focus is much more on value preservation versus value growth. But I think, we always look at a portfolio from a fund perspective and it's like, well, where is the risk in that portfolio? Invariably with investment assets, it's coming down to the tenancy profile of the tenant. I think, largely in Australia, we're very lucky that we don't have tenancy defaults or issues with our tenants. It's more about lease expiries and addressing, I guess, what you'd look at as sort of risks to income on a go-forward basis. So the risk mitigation is really, looking forward, making sure we're addressing vacancies, upcoming lease expiries, and that applies across all sectors. There are differences. Office tends to be a bit, more, either asset specific. You've got a whole building tenant, which can apply to industrial as well, although they tend to be longer term leases. Whereas, retail tends to be a lot stickier in terms of tenants. So you've got to sort of always step back to the sector and the assets. And then it's just looking at where is that risk and mitigating it.
Yeah. And are tenants demanding anything different, seeing increasing ESG or amenities in this environment?
Yeah, again, sort of and this is all very high level because there's a lot of nuances and differences between sectors and assets. But I think broadly, ESG is now sort of entrenched in Australia, particularly from an office perspective. And I think Australia has really, in a lot of ways led the way with ESG type initiatives. You've certainly seen that sort of flow through to logistics, industrial assets where, solar is now just a major part of it. I think that'll only increase too as logistics sector is going to go through increased automation and, you're going to see more, robots and so on. That's just going to lead to power demands. We haven't even touched on data centers, which is not something Charter Hall invests in.
Okay.
But that's a different sort of, whole set of issues in itself. And then retail, similarly, the same sort of things. You're trying to get energy efficiency, waste efficiency and water efficiency. They're all very simple things. And that's outside of the social and the governance issues as well.
I really like that you said ESG is entrenched rather than, I guess, just a box to tick.
It's a must have. I think, and there's, either from an operational perspective where you do get, quite meaningful savings from energy efficiency and water efficiency nowadays. That's actually flowing through to lower outgoings, which either means higher net returns or you're more competitive in terms of the rents you're chasing from tenants. But there's also sort of, there's a bit of push or stick from the investment side as well, where a lot of investors are very much, we need to make sure that you're either hitting your targeted neighbours stars or GRESB and the other various, ESG or environmental initiatives.
And do you see that more on the institutional side, ESG mandates?
Yeah, look, it's definitely, there's some investors which are very, focused on it. Others are not so focused on it. But it sort of doesn't matter. You're going to the higher standard. And that is generally seen as, again, Australia is seen as a very sort of leading the way in terms of not only sort of trying to hit the targets, but actually developing new products or being more efficient generally. I think the listed side is sort of happy to go with the sort of enhancements that you get out of the bigger business. And I think what you do see is sort of the whole industry lifts as a result of these ESG enhancements going across all sectors and asset classes.
Raising the bar.
They raise the bar. Yep.
Yeah. And you previously mentioned automation and robots. I'd love to know about AI and any integration potentially in Charter Hall. Are you harnessing this?
Yeah, AI is such a topical item at the moment. I think, you can look at it in various ways. I guess from a business perspective, we see it as a very important tool. That said, we make sure everyone realises it's a tool. It's not just the solution. But we're definitely seeing a lot of, I think, improved efficiencies coming out of AI. And, we're very early days, but as an example, across our sort of institutional side of the business, when we're onboarding new customers, invariably that leads to a whole lot of RFIs out of due diligence. So we've now developed an AI tool that lets us really effectively answer all those RFIs on an AI automated basis, which is still checked obviously by the business, but that's saving so much time as it's enabled us to sort of consolidate all of our all of our data and policies that AI can simply scan and provide the right answers for. But at there's an asset level too. It's like, how is AI going to come in? And certainly logistics, we are seeing automation coming in, particularly for like businesses like Coles and Woolworths as they look to ramp up their online delivery presence. But then you're also looking at it from a much broader perspective. So office, it's like, what impact will AI have? And, is that going to impact on office demand? We're still very much, jury's out / we don't think it really will have that big an impact, particularly, again, for the right assets and the right locations. And we think it'll actually create more opportunities.
Okay. Can you tell us a little bit more about that and AI creating opportunities in the office space or tenants? Yeah,
look, it's always a funny one because I feel like, again, we're such early stage adopters really of AI, and it's obviously sort of going through sort of an exponential curve in terms of, its usability and practical sort of outcomes. It's sort of a funny one too. In some ways, you're almost like asking AI to tell us what impact will AI have. But we do see it sort of like, we just think ultimately it's going to become a tool that it'll get rid of a lot of inefficiencies in administrative tasks and frees people up to actually focus more on value add type tasks. Still, products are still very much being evolved. And I guess, we take a view too as to, well, how can we use it from a business perspective? How will our tenants use it or tenant customers? And then, we sort of monitor. But, I think we don't see it really as a threat. We see it as more of an opportunity going forward.
Yeah, super interesting. I'd love to circle back all the way to your role. So you mentioned a lot of meetings day to day. Are there any other aspects to your job or what else are you doing?
Look, we're always sort of planning, what we're getting the feedback from investors, what are they, because their investment strategy is also evolving and changing as they adapt to, either different demands, return requirements, different portfolio construction. So we're constantly trying to get the feedback from our investors, both existing and prospective investors, then working with the fund managers or the sectors to understand what's happening in the portfolios, both existing again or what's in the pipeline. We do undertake, development in the flagship funds for office and industrial, small proportion of the total, but that helps us create new product as well. So we're always trying to get the feedback and feed that through to our fund and sector teams to help them when it comes to sort of refining, I guess, their investment strategy or portfolio mix, fund mix.
Yeah, a lot of stakeholders to manage
There are a lot of stakeholders, but this is sort of the challenge. It's like you need that feedback because ultimately it's not our capital. We are the beneficiary of managing people's capital, and that's a privilege, not a right. So, you've got to make sure that you're understanding what are their requirements. So that's a very sort of, interactive and constant dialogue because it simply changes all the time.
Yeah, and what does that feedback look like?
Generally, it's, there's always a large component that is returns. What are the returns doing? How are we meeting the forecasts? And, how does that, because they need that to understand how it flows through for their business. So I think the returns is always key. As I mentioned before, risks, where do you see risks? And it's always like trying to make sure we're addressing risks before they happen or at least identifying them. And then there's reporting too, which is a challenge, but equally that's where AI can come and help too because we are seeing, particularly in Australia, increased compliance type reporting. That is something that our institutional funds have to deal with too, so we have to help them out with that as well.
Yeah, great. And I'd love to kind of wrap up now that we've got a good understanding of Charter Hall, what they do and what you do on the institutional side.
Sure.
Is there any pieces of advice that you wish you had earlier on in your career, something you'd say to students looking to get into the property industry?
Sure. Well, as I said before, always say yes and lean in when you do get an opportunity. I think, look, I think it's always trying to be learning, try every day to just be learning something new. And then I think it's more a case of like looking for opportunities. When you do find an opportunity, it's take that opportunity. I think, you do need to take risks to keep progressing. And it's, there's an element of backing yourself when you do see something that you think, hey, that could be really interesting. I should get involved, back yourself.
Yeah, amazing. Well, thank you so much for your time today.
No problem.
I've definitely learned a lot and I think our listeners will too.
My pleasure.
Thanks for coming on today.
No problem. Thanks, Samarah.